Hey, what's up, guys? This is Omar from Trinity Trading Partners. Um, Wanted to make a video on a interesting topic, and it is basically on how to fade parabolic type moves. And this is a trade we took last week, starting about 2 weeks ago. We were interested in this trade, and it was on gold. Um, So I'm going to walk through the thought process, how we executed, some of the data behind, why we thought this might have been a good idea, um, and then overall, what to look for on other type of sort of parabolic tops, because we did actually see quite a few in the last week across several different sectors like quantum and nuclear alternative energies. Um, so hopefully, this will be a good video. I would say like this is in terms of trading, I would say this is more of like an advanced type topic. It's not something you should be looking for, and it should only happen on occasion. But when it does set up, it is like a really nice trade to take if you can nail it. Because usually when you have a parabolic type move, the reversal can be of the same magnitude or even greater in a shorter period of time. Um, so let's dive into it. Okay, so this is the GLD ETF. It's the ETF that tracks gold prices. So this is a weekly chart, going back to 2020 here. Um, so gold basically since mid 2020 all the way until 2024 had this like really big sort of weekly range, didn't really do much. um I've never really traded gold this entire period. And then early 2024 had this nice weekly breakout, got to new highs on the first week of March, and then it just did this like crazy trend, right? So it ran for a few weeks, based, ran for a few more weeks, kind of came back in. This is the 20-week moving average and Bollinger Bands, um, two standard deviation Bollinger Bands. Came back in, based, ripped back higher. Um, and in 2025 this year, uh, gold really got a lot of traction, and it was kind of all over, FinTwit as well as the news. And it had this really nice consolidation from May. So it kind of had a big move higher, came back in, had a really nice weekly consolidation. And I'm going to zoom in on the daily chart to kind of show this. But basically, from late April into August, really, really nice consolidation. And then it broke out and it had this crazy run, right? So it went, this is a precious metal going from, 320 to 400, right? So that's 80 points, about 25-ish, 30%, right? In a span of, 1, 2, 3, 4, 5, 6, 7, 8 weeks. Um, And so that's a crazy move, right? That's a crazy move on a stock. Especially a crazy move on gold, which is, the last time it ran like this was kind of a long time ago, and it's not a typical move for gold. So let's get into the daily chart here. You can zoom in. Here you can see that weekly consolidation, really nice, like tight action. I, in hindsight, I didn't trade this entire run up. Which kind of sucks because when you look back, it's like, wow, how did I miss this as a breakout trader? How did I miss this like crazy trade? And the fact is, there's so much happening in equities that kind of just forgot about gold, unfortunately. But it is what it is. Um, so uh, starting a couple weeks ago, um, actually, let me go back to the weekly chart here because I want to show you um, basically when we kind of started thinking about uh, this chart being a little overextended. So, um, on October 15th, so that was this week, I posted a chart of this weekly chart, and I basically said I don't think I've really seen a chart quite like this where you have um, a Bollinger breakout, that's fine, usually lasts a few weeks. But to have 1, 2, 3, 4, 5, 6, 7 weeks close over a 2 standard deviation weekly move, that's a lot. I mean, that's something I rarely see, um, especially on a weekly time frame. Um, so, I posted the chart basically this week as it was forming this candle. It was on the 15th, so that must have been Wednesday. Um, so back to the daily chart right here. I posted the weekly chart, and I said, hey, I don't want to outright short this just yet, but I am starting to get pretty bearish. And so what I did was the first trade was I shorted or I took some call credit spreads and I at the money, so I shorted a 385, 390 spread. So a five wide spread for 2.3, about 1 to 1 risk to reward. Risk $270 to make 230. And this is the first day where we started thinking about shorting gold. Um, what happens the next day? We gap up and we literally like ran to the highs. Um, and then this is where we started thinking, hey, maybe it's time to outright short this. Um, okay, I annotated the chart with all the trades that I personally took on this short. Um, so I'm gonna go over all of these. I talked about originally these 1031, 385, 390 call credit spreads for 2.3. That was the first trade. That was the day where, we started to recognize gold is looking a little bit oversold. Um, and sorry, by the way, this is a 15-minute chart now with extended hours on, because we did use extended hours to formulate our following trades. So um, this was the first position. So this is kind of a chiller position. It's like 15 days out. All you need is some sort of mean reversion to get paid on this trade. Um, the next trade was so after this day where we just kind of we gapped up, we were higher. Overnight we had a really crazy move up to 402 and as well as a reversal overnight. So what happened was, we closed at the highs, overnight trading ripped higher, almost a couple percent. And then we had a strong reversal into the New York Open. So this was the open here. And so the way we wanted to trade this was, hey, if we take out these pre-market lows, um, we can see a bigger reversal, the start of a bigger reversal. And so that Friday, on the break of these rolls, on the break of these lows, we took GLL shares at 13.6. This is the inverse gold ETF. And we also took some 390 puts at 3 that were expiring basically one day, uh, the Monday, so um, 1 DTE. Okay, so the puts paid pretty quickly. Oops, this should be 5. Okay, so the puts almost doubled. They went from 3 to 5 on this aggressive move lower. And then, we basically got rid of those, took the profit, and we wanted to remain in these GLL shares. Where the opportunity on the short really came was the following Monday, so over the weekend. Um, Here's extended hours. We had a really nice like rip um, into the New York session. A little bit of mean reversion at the open, but then more move higher, right? And we closed at the highs. This is where it gets a little tricky because from a technical standpoint, gold was up 4% after a really deep pullback. Um, and it basically had equal highs here with the pre-market high from the previous week. Um, and so, you know, this is where some of the less technical um, setups come, but more of like the logical setup. So I've screenshotted something that was shared on Twitter by Short Bear, who's, you should go follow. He posts a lot of really great content. He's going to be on the next Market Wizards book. But he basically said, he posted this. Um, Historically, when gold rips 9 weeks in a row, almost every single time there was a very deep pullback, right? So there's only been four other instances. Both times saw a pullback within um, at least 2 days. One time there was a pop higher and then a 16% pullback the next day. Um, so here we are on Monday after 9 weeks of gold going straight up, and we're up 4% on the day. So the thought process that I had was, if gold just has a red week, forget like a crazy mean reversion. All you need is a red week, um, and that would be aligned with historical movement, right? As we can see here. So what I ended up taking on that Monday was these debit spreads, 390, 385 put debit spread for one. They were a dollar near the close, not quite at the close, but close to it. I think they dropped to like 85 cents or something at the very highs. Um, and the idea I had in my head was, um, if gold literally just has a flat week, like week over week change is zero, these will be um in the money, and you'll get paid, right? If it has a red week, they'll be completely in the money, and then these can go, if you know what a debit spread is, this can go 1 to 5, right? So I entered those, and I also looked back historically at gold and how it um, if it does gap down typically, and if you go back, look at the daily chart, there are a lot of times where gold will close at the highs and then gap down the next day. So I thought it was worth a shot to enter a position at the close on a 4% up day, when historically, you know, after 9 weeks up, gold will retrace quite a bit. Okay, so I took these. Next day we gapped down. These went to 2.5, and then later in the day they went to 3. So I sold these put debit spreads um, for around 3 to 3.2, I think, by the close. So those paid 200%, which was a really good trade. I think this is where the most opportunity was the gap up, gap and go, close at the highs. That gave the best, like the best entry. So this was like definitely the money maker. And then the following day, we saw continued weakness. So a day two move lower. And I got to get close those credit spreads that we took around 2.3 at one, so about a little over 50% of premium collected. And then we also got a chance to close out our GLL shares at 15 from 13.6, which is a really good move on just stock, right? Okay, so between the variety of trades we took, short calls, long GLL shares, long naked puts, long debit spreads, there's a variety of ways to trade this after a parabolic run on gold, if you knew what to look for and you had data to support it, right? Um, so, these kind of trades come every now and then. I would say like a couple times a year. Um, and they're very profitable if you know how to execute on them. And I'm hoping, this video kind of showcased how to execute as well as what to look for in a very parabolic move setup. One question that you might have is, okay, Omar, great, you shorted gold, woohoo. Why didn't you short it here or here or here? right? We were getting weekly closes over the Bollinger Band, you know, one, two, three times here. Like, why here? What caused you to do this? One extra thing that really added to this trade was sentiment was through the roof, right? I started seeing a lot of P&L screenshots on gold, a lot of people making money on gold, and then even on um, the Friday, uh, this day where we sold off, um, I had been going to dinner with my wife, and I passed by a store that said, we now accept silver as currency. And I was like, hold on, since when is that ever a thing? This aligned with, you know, if you go on, just do some, you know, quick research on Twitter, you can see there over these like last couple of weeks, there were lines out the door of jewelry stores of people wanting to buy gold and silver and precious metals. And those kinds of things, again, they're not technical aspects of a trade, but they are market sentiment, right? And when you have the masses wanting to buy gold, wanting to buy silver, using silver as currency, um, that's when you know something is wrong, and there's probably going to be a mean reversion somewhat soon. All right, I hope you enjoyed this video. You know, if you're in the Discord, you have any questions, feel free to message me, DM me, tag me in chat. Um, yeah, and you know, hopefully, you know, we'll catch some good moves into the end of the year. I'm pretty excited for the end of the year, actually. I think we have a really good potential to ride some good trades. Um, okay, you know, hope you're having a good weekend, and I'll see you guys all Monday early morning. All right, take care.